Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. I got an excellent question in my inbox that said, look, if an ETF is at its 52-week high, does it make sense to invest in it? Like, isn't it overpriced and I just wait until it comes down and pick it at a better price? And there's a lot that actually goes into that, and the answer does depend on what your approach to investing is and what your goals are. So we're going to do a lot of screen share. We're going to look at some charts to give you my perspective on that answer. But first, let's answer the question of what is a 52-week high, and conversely, what is a 52-week low? For those that may not know, 52 weeks is a year, and these stats are usually pretty prominent on a bunch of investing websites. Any app that you use, I can almost guarantee they're going to give you the 52-week high and the 52-week low. And what this is basically saying is, over the last year, the stock price today is either very close to where it has been in the past year, that it is getting very close to as high as it's been, or it is very, very low compared to where it's been within the last year. And the psychological thought sometimes is, well, if it's close to the high, the 52-week high, then it is not going to go past that. And if it's at the low, then this is my buy low, sell high moment, where this is the opportunity for me to buy low. Now, if you ask me, yes, investing is simple, but it ain't that simple. And I want to go through a few charts to kind of help to illustrate and understand this. I'll also say this, and maybe we'll do it as we pull this up. But basically, think of it like this. Last year in 2020, or I guess last year now is 2021, we saw 70 all-time highs for the S&P 500. 70 times we hit an all-time high. Now, we only have about 260, well, a little less than 260 trading days, because you take out the weekends and you also take out the federal holidays, Martin Luther King Day, President's Day, Christmas Day, stuff like that. So a little less than 260 trading days. And you take that 70, or really that 260 or so, divided by 70, that's like every 3.5, almost 4 weeks, you hit a new all-time high. And if every time I saw, especially last year, oh, the market's at an all-time high, it'll never go past it, I would have been wrong 70 different times. I've been wrong almost every 4 weeks, which is not the approach that you want to take. So I will start off with Coca-Cola. I'll show you a few things that you want to know about these 52-week highs and lows and how I personally approach it. So let's go ahead and look here. This is Coca-Cola. This is on Thinkorswim. And I like this when I'm really kind of digging into technicals. For those that don't know, technicals are like chart reading and really figuring out the price movements. There's a long story we can talk about technical trading and how successful it is or is not, but you get the point for the question that we're trying to answer today. All right, so this is Coca-Cola, and we have a specific date range here. Now, for those that don't know how to read candle charts, I'll teach you that real quick. What we have here, this is a red candle, which means the stock was down in that day. Each one of these little candles, these little formations, these are single days, okay? And if you see a big red candle like this, that means the stock dropped a lot on that particular day. And if you see a white candle like this, that means the stock moved up in a big way, okay? And then you see these little lines, these wicks. These are basically the distance the stock traveled, because as you know, when you are investing in that particular day, the stock can go up and down by a lot, right? It may start off, for example, here's what we call a doji candle here. So during the day, the stock dropped as low as $56.61. We know that because we're tracing this all the way to the right here. Okay, so during this day, this looks like November 5th, it went as low as $56.66, and at one point it was as high as $57.13. But when the market was closed at the end of the day, it was at $56 and about 87 cents. So that's where it closed. Okay, it's basically how you read it. And then also, on a down day, and feel free to rewind this if you need to, but on a down day, the closing mark is down here. So it closed at the end of the day. It was $56.37 on that day. So it went this high, it came this low, but at the end of the day, it stopped here. And on this day, it came this low, went this high, and it closed at the top of this candle at $56.38. Okay. That's just how it works. It's just telling us how much did the price move in that day. And the reason why you may want to consider using candle charts is because you're not going to know that in a regular line chart. Okay, so that's what that is. Ignore the red and green lines. They're not important for this discussion today. All right, so now if I'm looking at this, Coca-Cola, decent company, and we see, okay, went up and down and something happened here, don't know what it was, and then an amazing thing happened at this point, because then things started taking off. And at this point, this was, probably a 52-week high, and we're like, oh my God, I don't know if I want to buy it at this point. This is overpriced. It's too much. It's high, right? I would prefer, everybody would, right? We prefer to get it here, but we don't have the benefit of that information. We didn't have it at this point in time. But if we fast forward, this is November going into December of 2021. We fast forward, look at that. Keeps going up, and keeps going. And when we say, oh my God, it's at an all-time high, or not all-time high, but it says 52-week high back here, and you say, well, no, I don't want to get it. Next thing you know, it's even higher. And it took a little bit of a dip here. And if you had known that, right, you may have picked it up here, but maybe not, right? Would you have known in 1, 2, 3, 4, 5 days you would have had another opportunity? Maybe not. And then even so, right, this is at $57.53. It closed, so we're talking, what, $4? A little less than that, actually. No, not even that. So 57.74 to 57.53. So we're just talking a few cents. So at this point, you're like, oh, well, it's only 20 cents from its all-time high. I don't want to get it. And then it still keeps going. And this is going into January of 2022. And then it keeps going more. And we go all the way up here to where it's at its current 52-week high of $62.82. That's one of the dangers. That's just one of the dangers of using 52-week highs as the end all be all. Oh, I don't want to touch it because it's close to its 52-week high. Like there aren't any hard and fast rules or any real research to say just because it's close to its 52-week high that it's not going to go any further. That's just what happened last year. And last year, right, in the past 52 weeks, there could be a lot of things as to why it only hit that range or not. So I am not someone, if I'm a long-term investor, keyword, if I'm a long-term investor, I do not care about whether or not a company is at its 52-week high or close to it or not. Because as a long-term investor, if I'm picking a quality company, this is the exact scenario I would prefer. I would prefer to invest at whatever point I'm investing in, whether it's here, whether it's here. I don't care, because my belief, based on what I've read, how the stock has performed in the past, all the things that we talk about on this channel every day, that a year from now or 6 months from now or what have you, that the stock should be higher. And in this case, this played out. Now, it does not happen every single time. Okay, to be realistic, it don't happen every single time. But again, just looking at a 52-week high and just saying, oh, that's it, don't want to touch it, that's not the best method, because you could end up in a situation like this where, if I zoom, let's see, this was, we said what, November 5th, I think is what we were looking at earlier. We go backwards, right? We could have gotten it at $58 or so and got however many shares you would have gotten, and made a decent profit from 58. And let's say you had several hundred shares or several dozen shares to here. That's decent. That's not bad at all. And Coca-Cola pays a solid dividend too, especially in a time where we know the overall stock market ain't doing so high. So this definitely would have been a place to at least consider. So that's, 52-week high, just holding it like that doesn't really mean a whole lot to me. But also, and this is what I complain about all the time, I even complained about it on Instagram this morning, PYPL. I've also seen this where someone will say, well, look, it's at a 52-week low. This is a perfect time for me to, I'm going to erase this, remove drawing. There we go. So someone said, oh, it's at its 52-week low. Therefore, we're going to zoom in here. Therefore, it's time for me to pick this up. Well, not really, right? So we're zooming back. This is September-ish of 2021. And things were low. And it was, 52-week low for PayPal. Then it hit another low. And this is at $205. It's like, oh, wow, it hit another low. This is the time for me to buy low and sell high. It's close to its 52-week low. This is a great bargain. And then it keeps falling some more, right? Now we're at 180. It's a great bargain. It's at its 52-week low. and then it keeps going even further. Now it's at 125. It's at its 52-week low. People keep saying that, right? And then it goes down some more. And now it's at a new low. Its new 52-week low of $103.03. It would not shock me if at some point next week it's below that and we hit yet another 52-week low. So just using that as your barometer is not the path that I would use, whether I'm an investor, long-term investor, or even a trader, because it makes things a lot more difficult. Now, I will tell you this. Let's go back to Coca-Cola. If I am a trader, if I am trying to make money quickly, if I'm trying to make money, a week or two, maybe 3 weeks or something like that, then I'm not necessarily, again, focused on the all-time high, or I'm sorry, the 52-week high. I'm more concerned about where can I get it at the price that I personally want to get it at. And even more importantly than that, the question is, where does it show me in this chart that the price kind of, it finds what we call support. We talked about this in the chart reading video, where we see like, hey, the price comes back down to this level and then it comes back up. It comes back down to this level and then comes up. I like to think of it like a basketball, right? When it hits the court, it bounces back up. So where's the court at? Where's the support level? Is the practice of what technical traders do. Again, we can argue whether or not it is a practice worthwhile, right? So someone could look here and say, okay, well, it's at this 52-week high. I'm not necessarily concerned about that, it being its high. I don't care if 95 was its high and it's nowhere close to that. What I'm concerned about is, where does this stock start to come down and where does it start to bounce back up? And depending on how you want to look at it, and make a drawing here, some people could say that this is that range, right? And again, it's not the most, this is just an example. So some might say, it's at 62, it's at a 52-week high. Personally, I don't care. It could be at, $1 off from that. What I'm more concerned about is, when will it come down to about $60? That's where I want to get it, because I can get it at 60 and sell it at 62. Now you may think, well, that's only $2. Well, usually traders are trading with, thousands of dollars. So it's $2 times 500 shares or something like that, and that would be a big profit even on a small swing like that. That is what a trader is trained to do when they're reading these charts, and they're just saying, well, it's not about the 52-week number. It doesn't matter where this occurs at. It's what price do I want to get this at? And if I were perhaps looking at Coca-Cola, then maybe I would also look for that $60 range or so. So I would wait. If I'm a trader, I'm gonna wait. If and when it comes down, it may not, right? There's a chance that it, just like we saw earlier in this example, it could just keep running up, and then I have to figure out what I'm gonna do. I talked about this for SBNY. Ooh, take a look at that one as well. SBNY. It was a regional bank that I like, that we had discussed, or mentioned rather, and I wanted to get it. I did cancel the order because it just kept taking off. So I think I wanted to get it around, it was like 300, yeah, right around here. This is where I wanted to buy it at. And at the time that I was looking at it, so its high is here, right? The high is 52-week high is 374. I don't care, right? I'm more concerned like at what price do I want to get this at? So I said, look, if it comes back down to this 323 level, 322 level, that's where I want to buy it at. That's based on my analysis. That's where I wanted to buy it at, but that's not what happened. And the stock kept going, and I don't own it. So now I got to come back and figure out at what point do I want to decide to come back and own this stock if I want to do that. But I'm not concerned necessarily about how close it is to this 374. It's what price do I want to pay for this, and where does the chart tell me is a good entry point. So now for me, I don't know, maybe 335 is a good price for me. I'm not convinced. I will probably wait and find a better entry point if I'm going to do a trade, something short term for this particular stock, because I do like the stock. But that's essentially how it works. Again, I'm not concerned about 52-week high, 52-week low. I'm not using that as my barometer. As a long-term investor, I feel like it's going to be another 52-week high every month. That's what I would hope for, right? So I'm gonna get it now because you are not going to care when the next 52-week high pops up. You are not going to care that you bought it at the last one. You don't care. You're making money, right? That's the whole point. But one last thing before we go, and hopefully this carries over into the share screen too. I'll show you where you can find these. So you can find it on this particular app on Thinkorswim. But honestly, it's a little complicated, and it's not something I recommend for beginners. You do have the option here, which you should be able to see. Yep, so on public, you just on the app too. This is the desktop version. You can scroll down. It'll tell you 1 year high, 1 year low. Just like that. You can make a determination on how you feel about that. The other thing too is if you, and it's also like the candle chart or the candlestick that we're telling you about, where it opened, where it started at, how high it was during the day, and where it closed. That information too is there too. All a candle does is just put those 3 data points together, and I can look at it like that. That's all it really is. The exact same information. And then, so again, this is on public. I'll put that link in the bio. And then you can also get it from Yahoo Finance as well. I saw it earlier. Here it is. So 52-week range. It was as low as about 48.97. It was as high as 62.82. That's it. And that's how you can find that information. All right. So hopefully that answered your question. Let me know if you have any more questions about 52-week highs or any other questions in the comments, because remember, I like answering questions. You ask great questions, you get great videos. Okay, so that is it for me. If you're not on public, you should be. I'll put that link in the bio. I still want to do the Grade Your Portfolio episode that's in the queue. I thought this was a little bit more pressing because I know people ask this question a lot more. So we'll do that next week. Make sure you check out the Flavor Podcast. We got some changes coming up over the next few months, so you want to get on the boat now for the Flavor Podcast if you haven't, because when we blow up and get famous, don't say nothing, right? You get to say, like, I knew him back when, right? I knew him when his wall was blank, right? So you definitely want to make sure that you're subscribing and hopping on that, because we got some really exciting things coming later this year. All right, so that is it for me. I will talk to y'all later. Have a great weekend. All right.